Have you ever been puzzled about the fluctuations in mortgage rates? One day they're down, the next they're up. Is it a riddle you can't quite solve? Well, let's break it down. Mortgage rates are inherently volatile. They don't march in a straight line, but rather dance to the rhythm of numerous factors. Economic conditions, decisions from the Federal Reserve, and global events all play a part in this intricate ballet. And the dance doesn't always follow the same beat. Depending on the time frame you're looking at, the interpretation of mortgage rate trends can vary. For instance, rates might seem to be rising in the short term, yet, when compared to previous months or even years, they could be on a downward swing. So, it's clear that mortgage rates are volatile by nature and they don't move in a straight line. But remember, understanding these fluctuations is key to making informed decisions. Now, you might be wondering how to make sense of these fluctuations. What's the key to understanding mortgage rate trends? It all comes down to perspective. You see, mortgage rates are a bit like a roller coaster ride. They have their ups and downs, but if you take a step back and look at the ride as a whole, you'll see a pattern emerge. For instance, you might see rates increasing over a few days or weeks, and think that rates are going up. But if you compare these rates to those from a few months or even a year ago, you might find that they are actually lower. It's like looking at a series of valleys and peaks on a graph. Yes, there are ups and downs, but the overall trend is moving downwards. This is why it's important to take a long-term view when assessing mortgage rate trends. You want to see the forest, not just the trees. Remember, it's crucial to focus on the broader trend, not just the daily ups and downs. So, what does all this mean if you're planning to buy a home? Let's break it down. The key is not to get caught up in the day-to-day fluctuations of mortgage rates. It's like trying to predict the weather based on a single raindrop. Instead, focus on the overall trend. Mortgage rates are like a roller coaster. There are peaks and valleys, but overall, experts suggest a larger downward trend is on the horizon. Does this mean you should rush to buy a house? Not necessarily. Purchasing a home is a significant decision, and it's crucial to consider more than just the mortgage rates. Think about your long-term plans, your financial stability, and the housing market in your desired area. If you have questions or uncertainties, don't hesitate to seek advice from professionals. They can provide insights tailored to your specific situation. In the end, understanding mortgage rates is all about seeing the bigger picture and not getting sidetracked by short-term fluctuations.